Trading Man here. Today, going to go over two different trades that I took from last week, one in gold and one from the Nasdaq. Similar setup using the 50% retracement tool, but one is a reversal, that's the Nasdaq. The other is following the sequences, that's gold. So we'll start with gold here. And what we had was a larger time frame, 50% short in 1993. Inside of that was a 50% short in 1982.70. Now from this area, we're going to look for short setups within the sequence. So there happened to be a 50% short here, 1976.10. We completed the targets, so we draw our next setup here. We have a 1966.60. Now the next setup ended up failing. We can see we broke above 1958.90. And what we ended up trading was the prior setup to its new low. And this is an hourly time frame, 50% short, 1961.90. What I ended up doing was going to the 5-minute time frame after seeing this 50% short become tested. And what I'm going to do from here is basically just look for intraday short setups to follow the larger trend. And so we start by drawing our high to low. We have a 50% short, 1959.30, and we complete the target 1953. We also earlier traded an opposing 50% long. I did not trade 1959.30. I was just observing to see what happens. We end up breaking the long and we complete the short target. So what I do now is I take the same setup to its new low. That gives us 1957.40. What I ended up doing here was I took two contracts, limit short 1957, stop at 1959 just above that 61.8 level, because if we break above that, we're probably going to head higher into 1961.90 to retest that short. So it's 2-point risk. I go for 4 points on the first contract. I end up trailing out for 3 points, and then I go for 10 points on the, no, I was going for 12 points on the second, ended up getting 10 points. So overall, get 10 points total. And I think I'm messing up my orders here. 1957, and then I exited at 54, so that's 3. And then I got out again at 50, so that's 7. So I got 10 points total. That's what it was. I got 10 points total. I did 3 and 7 points. 10 points total, 3 points and 7 points on, again, total risk of 4 points. So 2.5 times risk, pretty good trade there. And all it is looking at that larger time frame setup. And then we had that 50% short that traded, completed its target. And all I do is take the same setup from this high to its new low. That traded. And then it did run to its target. If you went for the target, obviously it'd be a nice trade. I did not trade gold anymore that day, but we complete the target. And if we take the same setup again to its new low, that is what traded at 1954.30. And we can see that that is what has taken gold lower. It nearly retested on Friday and then eventually completed these targets below. So that is that. Moving to the Nasdaq, this is similar. We're still using the 50% tool, but this is the reversal strategy that I like to use. So on Friday, we are going to go to a blank drawing set to make it easier for us to see. But basically, we were inside of larger time frame support. So if we go to a hourly time frame, we'll have to go to a daily time frame. What we'll see is that there is this high to high draw here that gives us support at 15,267, 15,021. And if we go back to the 5-minute time frame, we can see on Friday we were inside of those larger time frame levels heading lower. The S&P was also trading larger time frame support. The Russell was trading larger time frame support, and so was the Dow. So all the indices were on larger time frame support. The Nasdaq was at lows of the day. And for this reversal strategy, I want to see lows of the day. I want to see larger time frame support. If it's highs of the day, I want to see larger time frame resistance. But in this case, we have a long setup. So it's lows of the day, larger time frame support. And we're going to go to the tick chart here. We're going to use the 512 tick chart. So if you're unfamiliar with that, What it means is instead of being time-based, like 5 minutes or hourly, every candle is 512 trades or transactions. And it's a great way to look at the volume in a way because you see where traders are participating the most. Now, on Friday, we can see that we were heading lower and we are inside again of this larger time frame support. And what we have here are some lower highs. We can see we had a lower high, lower low, lower high, lower low. Notice how this high is not above the prior high. To validate the reversal, we want to see a break above the prior lower high in this case. And so we finally get that move around 10 a.m. We break above these two prior lower highs, 15,116.75, 15,119. And because we break above these prior lower highs, a 50% long from our low of the day is a valid reversal setup. So I limit long two contracts here, 15,095 is the entry that I take, 15,095. Even the level's 15,091. I want to be ahead of that just so I don't miss it. And then my stop is again just outside the red level, the 61.8. 15,080 is the stop. So 15-point stop on two contracts. That is 30-point total risk. My first contract, I exit for 30 points. The second contract, in hindsight, I probably should have gone for 4 times risk, which is 60 points, but I was trying to get 100 points. I was trying to get to 15,195, okay, which is all the way up here. I was trying to get up to 15,195. And again, in hindsight, probably should have gone for 4 times risk for 60 points. Now, what I end up doing is when we complete the target at 148.5, I decide to start trailing this trade. And so I begin by just trailing the next setup. So I have my stop at the 61.8, 15,114. We then make a higher high. We can see we had this prior high here. We make a higher high. So what I do is I put my stop down here. I put my stop just beneath this low. And then we make another higher high. We can see that we broke above this high here. So I put my stop just beneath this low, which is basically the target of this Fibonacci setup. And I end up getting stopped out at 148. So again, this low was a 148.5. I put my stop at 148. That gets filled. So it was 30 points and 53 points on that trade. Still a great trade, only risking 30 points total. So to get 30 and 53, 83 points total is really good. It's good risk reward. But like I said, probably could have gone for 60 instead, and that would have been even better for me. It would have been 3 times risk. But that is the reversal strategy. What we're looking for as far as longs are concerned is be inside of larger time frame support, break above prior lower highs, and also we're at lows of the day, right? So we're not in the middle of the range. We're not at highs of the day trying to go long. We are at lows of the day inside of larger time frame support, and we are breaking the micro time frame trend. We have broken above the prior lower highs, and therefore we validate a reversal long. All we do is draw a 50% long from our swing low to swing high, and we wait for this to pull back. And eventually that does pull back into 15,091 and gives us a great rally higher. Risk reward is very important. Again, these trades are not 100% winners, right? We're going to have losers. It's part of the game. I even had a loser today in the Dow. It's what happens. It's all part of it. But what we can do is make sure our risk reward is positive, and so we can afford these losers and still be profitable. So that's all I got today. If you like this, leave a like, subscribe for more. Please share. It helps the channel a lot. If you want to join the trade room, link is in the bio. Otherwise, take care, and I'll catch you guys in the next one.